What's up guys, Colin here with Main Street Wolf, and in today's video we're going to be talking about cryptocurrency trading and the epidemic we're seeing here on YouTube of these cryptocurrency traders that are putting out videos claiming huge gains and essentially telling people how they did it. I just want to put out this video kind of talking about cryptocurrency trading and things you should watch out for when you're following someone that is talking about trading, just so you know if this person is someone that you can trust and the information is educational, or if they're trying to use you to make a quick buck and sell you a product or a service. First thing I want to do is kind of show you what I'm talking about here. So I'm going to go to YouTube and type in cryptocurrency, and the second thing that pops up is trading. So we're just going to search cryptocurrency trading. Here we go. Here's a list of videos that we can look at. How I trade Bitcoin for daily profit. How Kyle turned $480 into $50,000. Turned $250 to $1,500. All these clickbaity titles that are essentially telling people, hey, here's some money that you can make if you start trading cryptocurrency. It's relatively easy. You can make money every day. All you have to do is follow my process. And the first thing that I want to talk about is if it's too good to be true and the person seems like they're really selling you on a system, it probably is too good to be true, and you should be wary of that person. Because let's take for example this video that says $480 to $50,000 plus trading Bitcoin. Now, I'm not calling this person a liar. They probably did turn $480 into $50,000, and that's great for them. What I care about is if they are transparent about it, if they kind of are honest with us and say, hey, I was trading from the long side this whole time, and with any asset that you're trading from the long side that goes up 40 times in value, you're probably going to make money. And you probably would have made more money if you just invested in the asset and didn't trade in and out of it. So you have to watch out for how they phrase things. Are they transparent about always winning or always making money on every single trade? That's a huge indicator, because traders know you win and you lose. You don't always win. That's impossible. If someone knew how to win on every single trade, they would be a billionaire, because you would know the fluctuations of when to get in and out exactly all the time. It's impossible to know. If they have a system where they can turn, let's say, $1,000 into $10,000, they can 10x their investment, and they're promising someone they can do this every time and with ease, why don't they just do it themselves, not sell the system, but turn $1,000 into $10,000, then at $10,000 to $100,000, then $1 million, then $10 million. You get the picture. Basically, just keep on using their own system, don't tell anyone about it, and make a ton of money. The second point I want to make is that I'm not against trading. I believe it has some role in people's portfolio, whether that be a hedge to your overall position or maybe a small portion of speculative plays. But to trade your entire account, I think, is probably irresponsible, because something like 90% of traders lose money and only 10% make money. And if you look at that stat, that just is insane to me, that people go into it with high hopes, because if you look at the statistics, you're more likely to fail than succeed. In terms of what I think could work for trading for the cryptocurrency world, I think there was an opportunity, and there still might be, when you look at the fact that there's multiple exchanges and there are price differences between the cryptocurrencies. Now, earlier in the heydays of trading, not heydays, but earlier when people weren't aware of these markets, I think you could have looked at one exchange and saw a different price. Let's say for Bitcoin, for example, one exchange is trading at 2,700 and another exchange is trading at 2,695. You have money in both exchanges. You sell the 2,700 and then you buy the 2,695, and you basically pocket the difference. Now that's viable, I believe, in arbitrage trading, but the fact that cryptocurrency is so popular now, I think there's probably programs out there that are capturing that and reducing it to the point where it's not profitable. Other things I think that could be profitable but are probably taken over by computers at this point is also market making. The fact that someone has to provide liquidity in these markets, probably before there was more interest, the spread between the bid and the ask was probably larger. And at this point, with anyone programming some type of market maker or market making algorithm, I've noticed the spreads between the bid and ask, which is the profit of the market makers, are really low. And I don't think with the speed and the volume of cryptocurrency that's trading now, anyone is manually being a market maker. Let's talk about what to look for in someone that you're following on YouTube and you think is a good trader. In my opinion, someone that is educational, talks about managing risk, someone that's transparent about their winners and their losers, someone that's honest about how difficult it is to actually trade. Those are all traits that I would look for in someone to follow and learn from, because those people are teaching you frameworks of strategies, probabilities of what would work in a trade. They may say, okay, this trade, when there's a setup, if they've done research, maybe there's an 80% chance it goes up, but they're not guaranteeing it'll go up. They're playing a probability game. So if someone is educational and they're showing a strategy backed up by research instead of just pure speculation of, oh, I think it's going to go up, or oh, I think it's going to go down based on this random chart that I'm looking at, that's someone you should follow. And I'm okay with those people on YouTube. I just don't like the people that clickbait you and are promising huge gains. Let's say you decide that, hey, you want to give cryptocurrency trading a try. Why not? It's your money. But one thing I would recommend is trying to allocate a percentage of money that you're okay with losing. Also, if you're just starting off trading, definitely start off small. You learn most about trading from your errors, and you want to start off with an amount that you don't really care about losing, because you'll learn lessons by actually going out there and trading, because it's completely different when you trade on paper and then you go out and are trading real money. So I would say allocate the amount of money that you want to lose. For me, that number is 5% of my total investing money that I use for trading and more speculative plays. So that's just my allocation. Some people may YOLO and just say, hey, I'm going to go 100% into cryptocurrency and trade it all and try to win big. I would say if you're going to trade, the important thing is to manage risk. And you manage risk by only allocating 5% of your money to these speculative plays. So that's just my opinion. Like I said, you can do whatever the hell you want. The last thing I want to talk about is, what is your reasoning behind trading cryptocurrency? Because if you have any inkling or belief that cryptocurrency is the future and you're trading from the long side, going in and out, I would recommend just investing instead of trading. Dollar cost average your way into the cryptocurrency that you believe in. And like I said, only put 5% towards that investment and split it up over the year. You can dollar cost average, and through the swings of ups and downs with this volatile asset, if you believe it's going to go up in the long term, it makes most sense to just invest instead of trading and potentially miss out on a run to the upside, as well as basically if the currency crashes and you're trading from the long side and you have all your money in that trade, you could lose a ton of money, whereas if you're dollar cost averaging, you see that as a buying opportunity. So if you believe in the currencies and you're not just trading because of the volatile markets and the huge swings in pricing, I would say just invest in dollar cost average. Thanks guys for watching this video. Definitely leave your thoughts and comments down below. I'm interested to see what people think of the cryptocurrency trading environment right now. And if you have anyone that is approaching you, whether that be friends or family, and they're talking about how easy it is to make money in cryptocurrency, definitely show them this video to show them there are downsides and not to always believe the hype train. Thanks again, and if you enjoyed the video, please consider subscribing to Main Street Wolf, where we talk everything to do with money. Thanks guys.